Davies Harrigan is the Director of Academic Programs at Strata in Logan, Utah. He earned his PhD in political science from the Claremont Graduate School and taught political science at the college level for a few years now, for many years. Anthony Davies is an Associate Professor of Economics at Duquesne University and is a Mercatus affiliated Senior Scholar at George Mason University. Let's give him a hand.
Hey guys, how y'all doing? Good. It's nice to be here. We don't get to New Orleans as much as we might like, so really nice to be here in Loyola today. Obviously, we're going to be talking about the impending debt disaster, or as we call it here, the financial health of the government. But we wanted to start by maybe addressing politics a little bit. I'm a political scientist by training, so a little different than what Anthony will give us later. And please call us James and Anthony. We don't really stand on ceremony. So we had an election just recently. Anybody paying attention to this? Yeah. So I'm going to ask you a hard question. Go back in your mind and think about the issues that were discussed prior to the election. Right? What were the issues that moved the American electorate as we got closer and closer to the election?
Immigration.
Yeah, immigration, sure. What else?
ISIS.
Obamacare, ISIS.
Yeah.
Not as much as I would have liked, actually, but a little bit. Yeah.
Gasoline, oil prices.
Oil prices, gas and oil prices, sure. Speak up.
Trade deal.
Trade deals. We spent more time talking about other kinds of things. You're all thinking like economists now. Think like American citizens. Yeah, that's a different animal entirely, isn't it? Character flaws, which were legion. You should catch the satanic reference here at the Catholic school. What else?
The emails?
Emails, sure. We talked about all manner of malfeasance, right? Hillary Clinton and Benghazi and email servers, Donald Trump and God, yeah, let's.
Socialism.
That's enough.
Yeah.
Socialism to a degree. And Anthony and I don't know if you realize this, we write a lot of editorial output. And so once a week, we write an editorial for the regional and national and even international press. And one of our hobby horses is talking about the national debt and the deficit, which leads to it. What did the candidates say about the debt?
Very little.
Literally nothing, right? Not a damn thing seems to be the correct answer. And yet, we're going to tell you today that we think this is the single greatest issue facing the country now, and has been for some time, and probably the greatest issue facing the country that we could in fact have. So,
and likely neither party's talking about it because it is largely insoluble. So they just move on as if it didn't exist. So James and I came up with this term, deficit day. And deficit day is if you imagine that the federal government collected all the money it's going to collect from all sources, taxes, fees, whatever, all sources combined. Imagine the federal government collected all that money on January 1 and then started spending it at whatever the regular average rate of spending for that year is. So it spends the money, and at some point in the calendar year, the money runs out. The day the money runs out, that's deficit day. So to give you some example, this is 2012, and I'll show you some other years as well. In 2012, the top 1%, so the richest 1% of taxpayers, paid in enough money to fund the federal government for 56 days. So if you take all the money, the top 1% in the federal government, all sources combined, the federal government could run for 56 days on that money. Then after the top 1%, you've got the 2 to 5%. These are people earning over roughly $200,000, right? The top 2 to 5% pay in their money, and they can fund the federal government for an additional 44 days. Then comes the top 5 to 10%. They pay in enough money to fund the federal government for about 30 days. The top 10 to 20% give enough money to fund the federal government for about 41 days. We can pause here for a moment because what's noteworthy is we've gone through about half a year, almost 6 months, on the tax revenues supplied by only 20% of the population. The 20% of the population paid for 6 months of the spending. Here's the 20 to 40%, so you can think of them as the upper middle class. They fund the federal government for about 47 days. This is the middle class, right? The absolute middle of the distribution, the 40 to 60% range. They pay enough money in taxes to fund the federal government for about 24 days. This would be like the lower middle class. And then finally, the poorest Americans pay enough money to fund the federal government for 18 hours. And that's where the money runs out. That's all the money there is. That's deficit day. From that point forward, every dollar the government spends goes on the nation's credit card. In 2012, deficit day was September 10th. Oh, and by the way, who's paying for all those additional days ends up being your children and grandchildren. So all of these 112 days. What's interesting about that is the children and the grandchildren are paying for twice the number of days that the top 1% pay for. Deficit day 2012. 2013 deficit day, because we had some more revenues than we did the previous year, pushed forward. Here's deficit day 2014, there's deficit day 2015, and then this year we celebrated deficit day about 2 weeks ago, on November 4th.
Yeah, so in the days that follow, when we do put things on the nation's credit card, we do it to the tune of $11 billion a day.
Per day.
Per day. So for 2 weeks, give or take, we've spent $11 billion per day on this. And I just want to put this in perspective for you, because I say 11 billion and nobody knows what the hell that is, right? You don't. You end up with a problem with many zeros, right? 11 billion, 11 trillion, hey, what's the difference? How many football fans in the world? What's the most valuable sports franchise in the world right now? I've already given that it's football. It's the Dallas Cowboys. You could purchase the Dallas Cowboys 35 times with the money that we've spent in the last 2 weeks. 35 times. You could also, we did a little math last night, New Orleans after Katrina, you could rebuild New Orleans with what we've already spent 1.5 times on what we spent in the last 2 weeks. So these are the kind of numbers that we're dealing with. They're monstrous.
So when you do the math, the government ends up being able to afford about 3 out of every 4 days. And this has been true for about the past decade or more. So every 4 days that goes by, the federal government has raises enough money to pay for 3 of those. The 4th day goes on the country's credit card. So that brings us to this question of how much do we owe? So you add up these deficits every year. The deficits, think of it as using a credit card. Of course, you pay down your credit card a little bit, you make payments, but then you charge on it as well. And the deficit each year is like charging on the credit card. The debt is like the balance on the credit card. So we owe about $14.3 trillion. This is that we borrowed from people in foreign governments. We borrowed another $5.5 trillion largely from Social Security. So if you put that together, the federal government owes almost $20 trillion right now. So if you think about what is $20 trillion, you've been to Germany? Go to Germany. And in Germany, visit every city. And in every city, go to every store. In every store, look on every shelf and buy everything. The total amount of money you spend will not be $20 trillion. You've got to go to France and England. While you're there, you can go to the North countries. In fact, you've got to go to every country in Europe, visit every city, and every city go to every store, and every store look on every shelf and buy everything that is for sale. And then you will spend about $20 trillion. That's the amount of money that our federal government currently owes in debt. There's more. The debt ignores what we call unfunded obligations.
Yeah, we've decided to promise things to any number of people forever.
Which isn't called debt, because legally it's a different thing. The debt is a legal obligation. The unfunded obligations are things that, from our perspective, look like debt. They're instances in which the federal government has said to us, I, the federal government, owe you this money. And yet, if you read the fine print, it's not legally binding. That animal that the federal government has said, we owe you this, but it's not legally binding, is classified differently. It's called an unfunded obligation.
Yeah, no, it's almost, this is my daughter, Fiona, by the way. She's 16 and getting ready to go to college, much like all of you. And once upon a time, like an idiot. I looked at her and I said, Daddy will pay for college, don't you worry. A promise, right? That doesn't show up on my balance sheet now. But the $240,000 or so that the average college cost is will eventually show up, and that's unfunded liabilities. This is a mandate moving forward.
Yeah, largely the unfunded liabilities are promises of Social Security and Medicare benefits the government has made. So at some point you have or will have receive in the mail, it comes out about once a year, a statement from the Social Security Administration. And it says on there, here's our record of your earnings history up to this point. And based on this earnings history, we, Social Security Administration, project that when you retire, you will get retirement benefits of this amount. They say whatever the amount is. So they're telling you outright, this is what you can expect when you retire. That's an unfunded obligation. It's money the government has promised you, but actually doesn't have money to pay. So if you take the present value of, do you know what, anybody not know what present value means? Usually when I talk to economists, are okay with this. Take the present value, future retirement and medical benefits, subtract from that the money that's currently sitting in the trust fund. Also subtract from it the present value of the future Social Security and Medicare taxes. So here's what we promised, minus what we've got on hand, minus what I expect to bring in taxes in the future, and when you're done, that's the unfunded obligation. And that amount is about $100 trillion. There's a lot of uncertainty in that number, because to come up with this, you've got to estimate other things. You have to estimate things like population growth. You have to estimate future inflation, interest rates, things like this. So estimates of this number vary wildly. However, they vary from the huge to oh my God. The lowest estimate I've ever seen is $80 trillion. The highest estimate I've seen is $250 trillion. This estimate of $100 trillion comes from Mary Meeker and Kleiner Perkins. Nonetheless, something between 80 trillion and 250 trillion. This is on the lower end, 100 trillion. So in total, the federal government owes $120 trillion. Oh, and that's just the federal government. If you add in state and local governments, we're at a total of 130 trillion. So our entire government apparatus either owes or has promised and cannot pay $130 trillion. And that amount of money will buy you a planet, plus those three countries. $130 trillion, you can buy everything that's for sale on planet Earth, plus everything, again, everything that's for sale in those three countries. You will spend $130 trillion.
I don't even know what to say to that. But that's literally crazy. When you really think about the level of irresponsibility it takes to run up a tax bill that would have you able to buy the globe, everything for sale on the globe, and still have enough left over for half of Europe. We've probably made a mistake somewhere along the way. I'm just saying. And think about this. No one brought this up during the recent election. Not once. Not once did somebody say, we have a debt problem that needs to be solved. But trust me, we have a debt problem that absolutely needs to be solved.
One of the counter arguments you'll hear is, well, okay, the federal government owes $130 trillion, but we've got, how large is the economy? Yeah, I think it might be
18?
Okay, so roughly speaking, 16 trillion might be a little shade larger than that, rough, but thereabouts. So one of the things people do is say, okay, fine, the federal government or the governments owe $130 trillion, but we've got a $16 trillion economy. Now here's the fallacy with that argument. Hi, what's your name? Dominique. Here's the problem with that argument. I go to the bank. I would like a loan to buy a house. And the bank says to me, okay, Davies, how much money do you earn? And I say, Dominique earns $100,000. What's wrong with that? What's wrong with that is the bank isn't loaning the money to Dominique, it's loaning to me. The question is, how much is my income? Similarly, it's incorrect to compare the debt that the government incurs to the GDP, because the GDP doesn't belong to the government. It's our collective incomes. The government, do you know how much money the government takes in taxes a year?
like 3 trillion, 3.5 trillion.
Very good, yeah. About a shade over $3 trillion a year. So this is $130 trillion debt on $3 trillion income. That's like having a $50,000 income and owing $2 million. And it's not like having a $2 million mortgage. A $2 million mortgage means I owe $2 million, but I also have a $2 million asset to balance it. It's like having $2 million on your credit card. The government does have assets. Do you know what the government's assets are? Like you add up all the land, the Golden Fort Knox, all this stuff that the government owns. Do you know what the total is? I was never taught this in economics. I looked it up about 6 months ago. It occurred to me, I don't know this number. It's about $3 trillion. So if you take the government's annual income, $3 trillion, its assets are $3 trillion. Not one of those things comes close to what it owes, 130.
So what are we going to do about this?
All right, so yeah, so it raises the question, what's the problem with having so much debt? There are several problems. First off, it's too easy for politicians to make much ado about nothing. Do you recall, it was a couple of years ago, maybe it was in his first term, when President Obama was talking about the community block grants.
Yeah, block grants. That's right. We talked about it endlessly because it was going to finally start chipping away at something in the federal budget. They chose federal block grants to local communities, which was, I think, funding things like midnight basketball or things like this. And we spent, I think, the better part of 2 to 3 months, isn't that right?
I think so.
Debating whether we should make this massive cut.
Yeah, it was back in, I remember the debate started like January, February, whatever year it was. And then it was about that, right, 2 to 3 months, you're getting op-eds and people in the media talking about this. And the back and forth was, it was like $300 million in community block grants. And so the president said, it was, yeah, $300 million. The president said, all right, we need to balance the budget, we're going to make these cuts, it's $300 million. And people on the other side saying, no, you can't cut this money, this is money that goes to the neediest Americans. And so for a couple of months, we're talking back and forth about the pros and cons of cutting $300 million. It's a hell of a lot of money.
Except, it's not.
The government blows through $300 million every 45 minutes. We spent 2 months talking about a cut that would save us 45 minutes of spending. So this is the first problem with so much debt. It makes it it gives politicians tremendous cover to pretend to be talking about things that are meaningful when in fact they're talking about nonsense. We talk about not going to, not having a space program when there are people that need to be fed, right? You can shut down the entirety of NASA, everything it does, and that'll save enough money to fund the government for 48 hours. Second problem, it puts tremendous pressure on the Federal Reserve to keep interest rates low. So you hear the Fed, you'll hear politicians and members of the Fed arguing that we should have low interest rates.
Well, and low interest rates are a boon, right, for probably everybody in this room who's taking out student loans.
Right.
For me, I bought a house about a year ago. Hey, low interest rates are a great thing. I bought a car last month, 0%, free money, right? So anybody who's looking to spend a lot of money is going to benefit tremendously from low interest rates. But that actually clouds the real issue, because the biggest beneficiary of low interest rates are people, corporations, dare I say governments, who owe tons of money. Because servicing the debt is incredibly expensive, and if the Fed keeps interest rates low, servicing the debt just got a lot cheaper.
With the money that we officially owe, forget about the unfunded obligations, just $20 trillion. If interest rates rise just 1 percentage point, it will cost the federal government in additional interest expense as much as the Iraq and Afghanistan wars on an annual basis. A 1 percentage point increase in interest rates.
That's all the money we've spent on the Iraq and Afghanistan.
No, it's the annual cost.
Per year.
Right, yeah, per year. And that's just a 1% increase in interest rates. The federal government right now is paying about 2.2% interest on its debt. Historically, on average, it's paid 6%. So right now, we're about 4 percentage points below what the historical average is. So imagine waging 4 Iraq and Afghanistan wars simultaneously. That's what it would cost the federal government for interest rates to rise just to their historical average level. Last problem, we're quickly approaching a point of no return. A government, anyone is bankrupt when you can no longer service your debt. So service your debt means it's not a question of paying it off, right? It's a question of just being able to make monthly payments. It's like with your credit card. You don't have to pay off the balance of your credit card. You just have to, to make them happy, you just have to be able to make the monthly payments. Just keep on doing that. That's called servicing the debt. Well, you run into trouble when your income isn't adequate anymore just for servicing the debt. Forget about paying it off. So let's think about this. Currently, the federal government pays 2.3% interest. If you think about the full $130 trillion it owes, just the interest on that is $3 trillion a year. And you already said the federal government brings in $3.3 trillion a year. The conclusion is the federal government's actually bankrupt right now. We're not talking about it, largely because the politicians know that people aren't aware of this.
Right, and the only way to solve it would involve a fair amount of pain, which in an election sequence, an election cycle, no politician with a brain in his head is going to get in front of people and say, here's what we need to do. But the politics of it, I think, go even deeper than this, right? We've got the Federal Reserve, which is theoretically an independent body, deciding what interest rates are going to be. But clearly, there's all manner of congressional and even executive pressure on this body to keep interest rates low. Why else would we be 4 points now below our historical average, even as our financial health gets worse and worse and worse and worse?
So one of the ways, I think this is my guess, one of the ways this is going to play out is the federal government is going to renege on its some of its unfunded obligations. So probably within the next decade, politicians are going to start talking about you. They're going to start saying things like, you are a privileged generation. You got to go to college in part because the federal government subsidized your college loans. Some of you went to schools that were directly supported by government funds. And more than that, you're now educated, which means you're employed by workers or by employers who probably provide you with private 401k plans. It's time for you to give back. And the way you're going to give back is by forfeiting your Social Security benefits. So you'll be described as a privileged class, and because you're a privileged, you need to give up your Social Security benefits. And there's going to be lots of talk about the justice of that, when in fact, the underlying reality is the federal government is reneging on its obligation. It's defaulting on money it has said it owes you.
But you all know this already. How many of you are really relying on Social Security? In your head, you think you're ever going to get this? You're going to be okay.
I've been getting it for over 10 years.
You're going to be okay. He and I might get something.
A little something,
A
right?
little something. But Social Security, the board as a board of trustees at Social Security has already said that Social Security as a program will be bankrupt in, I believe, the middle of the next decade.
Yeah, that's right.
2024, 2025. So the people who run the program are already paving the road for you to know that you're not going to get it yet.
What is this? Okay, so here's the problem. Here's one of the problems that will appear when we do talk about this. When politicians talk about this, they'll start saying things like, "Well, the real problem is the rich aren't paying their fair share." This argument interests me on 2 counts. One, it's an interesting, factual question. The other is, notice what's happening. When we start saying things like the rich aren't paying their fair share, what politicians have done, in effect, is turned your attention away from the problem, which is government, towards something else, which is you. So if we can get you, the people, fighting amongst each other, the more I can do that, the less you turn your attention to me, and the more I continue doing what I'm doing. So we'll start to say things like the rich aren't paying their fair share. So here's an exercise. Tell me what's fair. And to make life simple, I'll give you some numbers. This is the actual market income, comes from Congressional Budget Office. Market income means the income that people have derived from market activities. So it does not include money the government has given to the people through things like earned income tax credit or income assistance or whatever it is. It's just straight up money that you have earned through working in the marketplace, or it's not just labor income, it's also capital gains income, rental income, all that kind of stuff. But marketplace derived income. And here you see the poorest 20%, the next, the middle 20%, the next 20%, and the top 1%. So here's my question. Oh yeah.
Did you just assume that the poorest or the very poorest, because that's just 81%, did you just assume the ones above that?
No, I've left out everything between the next 20% and the top 1%. So these people are missing, just for simplicity. There's nothing interesting going on there. I just didn't want to deluge you with numbers. These people I wanted to see. They're interesting. These and these are interesting because a lot of you will come from households that are here. These are interesting because we care a lot about these people. Some of you may come from that, but we care a lot about what's going on here. So here's my question. I want to know what you consider a fair tax rate. When I talk about tax rate, what I mean is the effective tax rate, not the statutory tax rate. So the statutory tax rate is what's written on the book. This is how much you owe. Now what we know is what's written on the book and what you actually pay are two different things, because you employ legions of accountants and lawyers to find loopholes and ways you can avoid paying the taxes. Avoid's the wrong word. Any of you accounting majors? Yeah, avoid's the wrong word. No, avoid.
I think avoid
Avoid
is exactly
is
the
good.
right.
No, there's technical terms. Avoid is legal, evade is not.
Yeah, that's right.
Yeah, avoid is a legal thing. Okay. So you're looking for ways to avoid the taxes. So what I'm going to do here, I want to talk about the effective tax rate. Effective tax rate means, tell me, when all the dust settles, how many dollars did you hand to the IRS? How much did you actually pay in taxes? And divide that by your actual market income. So that's the effective tax rate. What did you actually pay divided by what you actually earned. So tell me, and of course there's no right or wrong answer here. It's your opinion. For these, let's just do these three groups. The poorest 20%, the middle 20%, and the top 1%. What is a fair, in your opinion, what is a fair effective tax rate?
0.
Yeah, see, I always do this with economists, and invariably, the first answer is 0, which does my heart good, but practically speaking, you got to run a government, right? So we've got to have some tax revenue. To give you some basis, tax revenue per GDP is 18%. So the average, if we were to fund the federal government the same way we're funding it now, and everybody pays the same thing, it would be 18% across the board. What do you think is fair for these three groups?
18% across the board.
Speak up now.
18% across the board seems fair.
Okay, 18% across the board?
I like that answer a lot. I like 15 a little more.
Well, 0 for me, 18 for everyone else.
Right, 0 for you, 18 for everyone else, okay. What's fair? I mean, even the hardcore economists, many of them will say, well, really the poor maybe shouldn't be taxed as much, and maybe the rich should be taxed more.
I mean, aren't there some arguments for having not flat tax rate, but regressive?
You want regressive. So you want these people paying more and these people?
They all pay the same share, they all pay the same, they get the same.
Okay.
Yeah, you could say that even if the percentage goes down as you make more, you could still have the absolute value be the same. So it would be regressive in percentage terms, but not, it'd be flat in dollar amount.
So something like maybe 20, 10, 5?
Yeah, or like whatever. I don't know what the calculation is.
Okay.
That's why for 0.
There's a compelling economic argument there. I don't think you're going to get anywhere politically with it.
Not much anyway.
What's fair? This is your chance.
Nobody wants to talk about fairness for somebody who earns $8,000 a year?
This is where the conversation really has to start. Anytime someone brings up the topic of are the rich paying their fair share, you've got to start off by telling me what is fair.
I mean, I guess it depends as well upon the things on which we're going to be spending tax money. Like, I don't agree with a $650 billion budget for war and terrorism, but that's where tax money goes. So it's like, before we decide how much is fair for us to pay, we should first decide where the things on which we're going to spend the money compared to the government.
Yeah, I think the only assumption you can really make is that we're going to start here with the things that we already fund. Right? And I think every human being is going to look at any budget of our size and find all kinds of things to object to. Right? But just starting in the abstract, saying, look, we've got X, we must fund X. What does it take to fund X? Right? I mean, that's a legitimate question. And most people are going to look at this, most people, not economists, but real people, are going to look at this and say, if you're making $8,000, there's just not a lot left there if you pay it done. Most people are giving $8,000 a free pass. Right? Whether that makes economic sense or not, that's another question entirely. But politically, that's about what you're going to end up with every single time. So the argument then becomes something more like, do we balance the, and you've heard these terms before, do we balance the budget on the backs of the middle class? Right, it's always on the backs of the middle class. Or do we make the rich pay their fair share? And look at the normative statements right in the questions of the answers are presupposed, given the wording of the question. But we're asking, what's the right answer? Taking into account both the economics and the politics.
Well, it seems to me like the fairest way at this stage in America would be to establish a progressive tax rate until such time as the income inequality becomes a more linear graph, right? And then once we've accomplished that feat, bring it back to a flat tax rate where everyone pays the same percent.
Okay.
Otherwise, you're going to be benefiting one class over the other at any, no matter how you run.
Give me some numbers for these three groups.
I'm not an economist, but I imagine in the meanwhile, the poorest 20% who are making not even remotely enough to survive on need to be paying practically zero taxes, while the top 1% pays something in the realm of 45 to 50% in reality, as opposed to what we're doing currently, where they end up paying 17% with all these loopholes they can find.
Got it. So the actual effective rate, 0, 45, how about minimum?
Somewhere around the 18% figure you mentioned,
Okay.
20% in the meanwhile, just until we can normalize an economy.
Okay, 0, 20, 45.
I would say 0, 38%, like 48%.
0, 38, 48. Yes, sir?
I was just saying, there seems to be a huge incentive to make the top 1% pay as much as possible and not the middle, because if the middle, who are the majority of the voters, feel the pain, then they're going to vote against it.
Yeah, there's political pressure to, put as much of the tax on these people as possible. They're only 1% of the voters. Putting aside issues of these are also people who are going to contribute to my campaign funds, right? Yeah, but apart from that, there's an interesting dynamic that pushes the taxes more toward these people. So 0, 20, 45, and 0, 38, 48. You want to see what they actually pay? Those are the actual federal taxes. Now remember, it varies by person. You'll find some people, the poorest 20%, who are paying more than this. You'll find some who are paying less. Similarly, you'll find some top 1%ers that are paying nothing. You'll find some top 1%ers who are paying more than this. What I'm showing you is the average for each group. On average, this is what they're actually paying. If you do the math, this is their actual effective tax rates. What they're currently paying. The poorest are paying 6%, the middle 20% are paying 13%, the top 1% are paying about 30%. But that's not the end of the story. There's another animal called transfers. Transfers are negative taxes. That is, the government actually gives you money back. So for example, let's say the government taxes you $1,000 and gives you back $300. Your net taxes are actually $700. A transfer, this is not your income tax rebate. Income tax rebate is you accidentally paid too much and now the IRS is going to square it with you. This is something different. This is the government actually using the tax code to redistribute income. To say, I'm going to take money away from you and I'm going to give it to you. One of the things that's used for this is the earned income tax credit. Yeah, do you know of anything else? I think that's the biggest one.
Yeah, I think the other bigger one that would concern people here is the lifetime learning credit, which I think has gone the way of the dodo in the past few years. Do we still have that one?
No, I was going to say, I always think of my welfare as a transfer, and that's Social Security.
And that's
Which
counted
it
here.
is. I mean, that's the biggest transfer program in the country.
Yeah, that's,
And Medicare next.
that's also included here.
As long as we do.
So here's the thing, if you want to talk about what people are actually paying, you've got to look not just at the taxes, the money you hand to the federal government, but also transfers, the money the federal government just gives to you. So here's the average federal transfers for each of those income groups. When you account for the transfers, this is how much people are actually paying. So even the most extremists amongst you want to tax the poorest 20% at zero. The poorest 20% are being taxed at negative 207%. They're actually walking away with two times what they walked in with. Middle income Americans are being taxed at negative 7%. Notice something interesting. When we talk about tax cuts in this country, anytime someone brings it up, someone else says, well, you mean tax cuts for the rich. Part of the problem is our tax system has become so progressive that by definition, every tax cut is a tax cut for the rich, because on average, those are the only people who are paying.